Think big, trade smart. This video is presented by Meitou Investing.
Hello guys, welcome back to another Meitou video. In a previous video, I have promised to introduce you 10 stocks that I think will go skyrocketing in 2021. Last time I have covered the first 5 stocks, and for today's video, I will cover the last 5. Before I introduce these stocks, I also want to take a moment to share with you my stock selection ideas so that you can judge whether the stocks are suitable for you, and also give yourself some kind of ideas when choosing stocks for yourself in the future. My original intention is not to choose the company with the highest return, but the company with the highest return over risk ratio. So let's say you try to find any penny stocks or any drug company that is developing new drugs. You can always find a few that will go double, but choosing stocks with high return over risk ratio is very hard. You should know that high returns are often accompanied by high risks. Simply pursuing high returns is absolutely impossible to make money consistently in the stock markets. Even if you did make money, you will eventually lose it back in the future. What we should pursue is the highest possible return with the same risk. So the stocks I have picked were the ones that I thought would get the most return given a reasonable risk. And that is going after what we often call as alpha. Also, these stocks aren't long-term investment in the traditional sense, but they are stocks that are very likely to do well over the next 12 months. When I do short-term investment analysis, like usually up to a year, I look at trends in stock prices on one hand, which is the technical side. On the other hand, I think it's more important to understand the macro trending, such as where are the opportunities likely to be over the next year, and which company are most likely to take advantage of them. So instead of analyzing the company's strengths and weaknesses, fundamentals and valuations, I'm going to focus on the main trends that matter in 2021, and why are these companies able to take advantage of these opportunities. Number 6, Mastercard, symbol ticker MA, current market value $359 billion. Mastercard is one of my favorite stocks for 2021, simply because Mastercard is the company that I think is the best positioned to profit from customer spending in 2021. The chart below shows that US personal saving rates. As you can see, the saving rates of Americans increased significantly during the pandemic. The original level before the pandemic was 7%, and now we can see that it's much higher, and it was even more than 20% back in January. After the pandemic's over, saving rates are predictably bound to fall sharply, and the only way to bring them down is through spending. This is also coupled with the impending arrival of a new economic stimulus package from the US government. With more money has been sent to the ordinary Americans, it means that it's increasing people's incentive to spend. So it's foreseeable that in 2021, with the end of the pandemic, the retaliatory consumption is almost a certainty. So when it comes to retaliatory consumption, people will naturally think of tourism, airlines, and entertainment. Yes, these industries will be the biggest winners. Companies in these industries are more or less irreversibly injured by the pandemic. While these opportunities may sound like good news, investing directly in these sectors is still risky. And Mastercard can be said to cover all the industries that can profit from the retaliatory consumption. And you don't have to worry about the fundamentals of Mastercard. It's just as solid compared to airlines and tourist companies. So I know at this point that some of you may ask me, why would you pick a Mastercard over Visa? Let me just be clear. Both companies are good companies, and Mastercard used to grow a little faster than Visa. The reason why Mastercard grew faster in the past was the rapid growth brought by the active layouts of international business. But it's also because of its heavy reliance on international services. Mastercard's performance in this year's outbreak has been less than satisfactory. But from what I see, the current stock price of Mastercard is still reasonable, and there's more room for growth. On the other hand, the retaliatory consumption after the global quarantine will be more favorable to Mastercard and its international business. Number 7, Chewy, symbol ticker CHWY, current market value $33 billion. So Chewy is the largest pet product e-commerce company in North America with more than half of the market shares. As an e-commerce company, Chewy, like many other e-commerce companies, has benefited greatly from the pandemic. And this benefit will not disappear even with the pandemic over. Because the pandemic has changed people's consumption habits almost permanently, more people are choosing online over local stores, and this trend's looking irreversible. And Chewy is definitely one of the biggest beneficiaries among the e-commerce companies. And more importantly, I'm not sure if you have noticed, during the pandemic, more people chose to keep pets as companions because they stayed at home for a long time. The following figure shows that the size of the entire pet industry grew by 63% in 2020. Note that this increase is also irreversible, because after the pandemic, these pet owners is not gonna say, okay, the pandemic's over, and I'm just gonna kick my pets off my house. No, that's not gonna happen. We also see that new pet owners are more concentrated in young people's homes. Unlike the older generation, who owns pets in the past, younger people have a more anthropomorphic attitude towards their pet and therefore are more likely to buy pet goods such as clothes, toys, and medicines. So to keep up with this trend, more high-end products will be made for pets, and profit margins for these products will increase significantly. And now, let's just put the pet accessory aside for a second. The demand for pet goods is also up by 50%. And to meet the needs for young people, pet food has also become more convenient. As a result, small packages of cat and dog food, canned food, and snacks are becoming more popular. You can be seeing that the overall scale and the profit margins of the pet industries will be improved qualitatively in 2021. And I think this trend will continue, and that the future development of the pet industry is worth looking forward to. So as you can see, Chewy has benefited both from being an e-commerce company and the online retailing trend as a result of the pandemic. According to Chewy's latest quarterly results, the company has seen revenue growth of 50% for 3 consecutive quarters, and that growth rate is likely to continue until the end of 2021.
Number 8, Home Depot. Symbol ticker HD. Current market value $309 billion.
Home Depot is one of the stocks that has a very solid fundamental, and the pandemic has also brought some benefits for it. The main reason why I'm optimistic about Home Depot in 2021 is that there's a high probability of the outbreak in the real estate industry. So looking at the chart below, it shows that one of the most important indicators for the real estate sector, building permits. It means how many new homes are allowed to be built. As you can see, this indicator is now at the highest level since the financial crisis back in 2008. And that's because the ultra-low interest rates have made home loans cheaper. At the current trend, I expect the US housing sector to continue its upward trend in 2021, and it may even accelerate. This is a boon to America's rapid housing growth that investors cannot ignore. So for Home Depot, as the largest building material retailer in North America, is one of the biggest beneficiaries of this demand for new homes. And I know, some of you may write me a comment asking about the real estate trust fund rates. And here I will give you my answer to that question. I don't choose rates over Home Depot is because of the low interest rate environment will affect the yields of rates. I do think the real estate industry is going to do well in 2021, but I had to admit that the pandemic has injured commercial real estate permanently, and this will definitely influence rates yield. And finally, because of Home Depot's strong fundamentals, if I was given a chance to pick, I will tell you right now, there's no way that I will not pick Home Depot.
Number 9, Eaton. Symbol ticker ETN. Current market value $54 billion.
Eaton is the largest power management company in North America. Its business covers around the globe and is quite extensive, from aerospace to power infrastructure and to small home switches and wires. It's even involved in electric vehicles that are on fire right now. But my reason to pick Eaton is related to Biden's administration. Eaton is probably the happiest company when Biden took office, and 2021 is likely to be Eaton's best year ever. I'm sure a lot of us knows what Biden will do. Besides raising taxes, he's planning to promote clean energy and expand US's infrastructure. And you heard me right, energy and infrastructure. They are both the primary business of Eaton. In terms of clean energy, Eaton occupies all upstream and downstream production chains of the power industry. For example, let's say that the government wants to build a wind farm. Then from the wind power generation equipment, power transportation, power management software, and data center required for the whole process, everything I have just mentioned is a part of Eaton's business. And I can tell you right here, even without a Biden administration, the global trend towards electrification is irreversible. The Biden administration is only an accelerator to this trend. Eaton, an industry bellwether, is bound to be one of the biggest beneficiaries. And in terms of building infrastructure, Eaton is a beast, and it will be the big winner. The Biden administration has announced that it plans to spend $2 trillion on infrastructure over the next decade, including a $400 billion on clean energy infrastructure. 40% of Eaton's revenue comes from the manufacture of electrical equipment, so it can be predicted that this part of Eaton's income will explode in 2021. In addition, as the pandemic starts to go away, there will be more power infrastructure projects and higher demand for power-related services, which are further good news for Eaton.
Number 10, Johnson & Johnson, symbol ticker J&J. Current market value, $423 billion.
Johnson & Johnson is the world's largest pharmaceutical company. The company derives 51% of its revenue from pharmaceuticals, 32% from medical devices, and 19% from general consumer goods. So there are two reasons why I picked Johnson & Johnson. One is the general trend of the macro markets. Basically, there's a good potential of a big rebound for the medical sector. Why? Well, the reason is that the valuation of the healthcare industry as a whole never been this low compared to other industries in the past. And that makes the valuations in the healthcare sector very attractive. The pandemic has inhibited the development of the medical industries except for the coronavirus. However, with the arrival of vaccines, the recovery will pick up a pace in 2021. And the market is undergoing a shift to asset allocation away from growing stocks and towards to recovery stocks such as Johnson & Johnson. Even though the medical industry is kind of behind in terms of recovery, it does have considerable room for future growth. In the healthcare industry, one of the reasons to choose Johnson & Johnson is the advantage of its coronavirus vaccine. Unlike other companies' vaccines, Johnson & Johnson's vaccine is less expensive and requires only a single dose, which means that it's highly competitive, and this is likely to be one of Johnson & Johnson's main growth generator in 2021. In addition, Johnson & Johnson has solid cash flow and a solid dividend. Johnson & Johnson has grown its dividend for 57 consecutive years and now has a yield of 2.65%. So if you're someone who loves steady returns, Johnson & Johnson is probably an investment option for you. And to cover up today's video, some of you may have already figured out that most of the stocks that I have picked are literally from different sectors. Some of them are high risk and high rewards types, while others are stocks that are consistently growing while paying dividends. I believe there will be at least one stock that will be suitable for you. Together, these stocks do make a good diversified portfolio. Thank you all for watching this video. I really hope you enjoyed it and my research can be helpful for you.
If you like my videos, please click the subscribe button. Your supports are much appreciated.